Welcome to Market Movers. I'm Jim Uriel with Scott and Mark.
Hi, Jim.
Okay, so we have the NFP on Friday. We're looking for the estimates are 165. Now, this to me is a little alarming considering for our recent lifetime, it's been between 180 and 195. The question for me is that, are they being too pessimistic now? Is everyone caught up in this slowdown?
They are, and I think rightfully so. I mean, if you look at data over the last couple months, it has been varying. There's been hot points and cold points, but this is another data point, Jim, that in my opinion has to come right down the middle of the fairway as far as expectations go, because the Fed's got to stay on their track of patience.
What number makes us worried about the Fed?
Anything over 250K, which as we've learned from last month's number, this is a real possibility.
Okay, now before we dive into our trade discussion, I'd like to point out these are examples, not recommendations or advice. Scott.
Yes, Jim. So looking at the ES today and seeing how it's kind of been really quiet lately, and I like to take kind of sometimes clues from the ES as how the ZN's behaving, right? Because depending on what rates are doing, tends to maybe lead us as to how much volatility is going to be in stocks, right? Especially the ES. There's been anything anywhere, which is kind of interesting. So, Jim, as an example though today, I think there's something out there that's a little bit interesting, which is looking at buying the week 1 Monday 2625 2600 put spread for about 7.3 ticks. This trade risks 370 to make potential 890. It expires February 4th, as I mentioned. Underlying is 2638. Just because I believe that we're going to retrace a little bit in the ES in the next couple, say, days or weeks. And this is one of those positions where at least you can put it on to maybe protect some longs you have, and it's right down to a 50-day moving average in the ES too.
Why Monday, not Friday, when as NFP is?
Yeah, great point. Well, because I like to see the markets react how the NFP is. And sometimes we get that delayed reaction too, because as everyone goes through the data over the weekend, then you see some of those big moves.
I like it, and I picked Monday too. And as an example, I'm looking at buying the week 1 Monday 2675 2700 call spread for just a hair over 5 ticks. It risked $260 to make a potential 990. Again, it goes off on Monday. And to reiterate something that Scott said is that sometimes we zap vol out of these things, the options that expire the day of NFP, we zap it out fast and furiously afterwards. If we have Monday on, we can see the market kind of absorb the number and react afterwards. Currently, the market was trading about 2638. Thoughts?
I agree, and that's something that's happened in the other non-farm payroll releases, is sometimes that move on Friday too, Jim, is a fake out. Sometimes that bounce that we see as the market fully opens at 8:30 on Central Time, that tends to be the move that's already been made. So then when you look at how it reacts over the weekend, and then obviously it opens on Sunday evening, you can really see what I think the true indications are.
Both of us talked about the stock market and the number as it relates to the Fed. Is this still all about the Fed in the background?
I believe it is, at least for now. But I will tell you, as long as the Fed keeps talking the same talk, as they follow that language kind of that they've been following in the last, say, couple commentaries, I think the Fed starts moving into the background, which is probably a good thing for the ES overall.
I think that'd be a good thing, too. Thanks for joining us on Market Movers. I'm Jim Uriel. We're helping to make you a better trader.